What is going on? What is going on? What is goody? What is goody? So we're gonna get back into a couple of things right now, and I wanted to start with how you can find your setup. So if you remember us going back to the first time we've ever talked, or the first time I ever went over a certain thing with trading, you understand that every move that you find in the market is always going to be either in a lower time frame or it's going to be an internal move. The point of day trading, you're finding that internal move whether your price is going up or where the price is going down. In this sense, as as I show you the picture, we're going up. We have a little trend moving around, and this may not even be like proper, but this is just me to show you that price is fractal. So what do I mean by that is what you might be asking is, and I mean by that is, you see, for instance, this on the right is a 1 hour candle. This is the time frame of an hourly, and on the left is like a 5 minute time frame. Realistically, it may not even actually look like all of this that you see, but for the most part, it is going to be as close as it's going to get to it because that's just, you feel me? That's just how it looks. If you like, look right now, this is the hourly, and this is everything. Like, this is a little bit quick, like a couple ones. All these lines here is because between these lines represents market opens for that day. And I will be going over different setups that you can find throughout this day and like throughout the week, what setups to look for, the proper setup, what setups have high probabilities and what setups don't. So right now though, I want to go over a couple other things just so I can let you guys understand the concept of certain things. So if you understand how price moves, you understand that there's also things called setups. And I remember that we were talking about fair value gaps and making sure that you get the right fair value gap, what fair value gap will work and what fair value gap won't. So you can see right here, if you want to know the colors are green for the hourly, blue for the 15, and then purple is like the 1 minute or the 3 minute, gray is the 5 minute, red is the 4 hour. It may sound crazy, so we'll do it in order. So starting from the 4 hour, we have red. Starting from the hourly, we have green. The 15 minute is blue. The 1 minute, oh no, well, the 5 minute is gray, and then the 1 minute is purple. So moving here, right? You see we have internal. I'll do this for you guys. So you see we have internal buy side, internal sell side, internal buy side, internal sell side. So we have like a market structure. We have a market structure shift again. So that's what the MSS stands for. Market structure shift. If you watch the current videos that I have sent and you watch them, you should have already you should already have every terminology down, if not most. But if you don't, it's okay. You feel me? Every time you're just slowly learning. You gotta make sure you're feeling good when you're learning. You gotta keep your notes. You always gotta write them down. Just make sure that you're taking your notes and you're keeping track of what you learned. So let's talk about a setup. What setup would be most profitable for you to take? So let's say we come in the market open, right? Feel me? Between right here to right here is probably overnight sessions, coming into market open, New York AM, so on and so on. So you see we have internal sell side, we flip out sell side, we created a buy side, internal buy side, we created another set of buy sides. So you see how these highs right here are stacked? When you see stacked highs being made, understand that price is going to, once it takes out one, it'll take out another. It'll take out another. It's always gonna progressively take out one high after the next, after the next, after the next. This is where you can find good probability setup. What is a good probability setup, you may be asking? That is what I'll show you. So you can see that when price has its internal sell side liquidity, and we come up, we swept out internal buy side, but we also had a 15 minute right here. I didn't drag it across on the picture. This is a screenshot. This is not the actual chart. So you see price take out this high, internal high, come down. We have this hourly gap right here. We didn't tap into it, so we had a market sector just come down, sweep out some internal sell side liquidity. Now all you gotta really look for when you take a setup is a manipulation which is probably, let's say, to the upside or the downside. What I mean is an imbalance, or even, pardon me, an imbalance or a liquidity sweep. With that being said, though, after you see a imbalance or liquidity sweep, look for an inversion fair value gap. After an inversion, you'll look for either a market structure shift or a change in the state. What do I mean by that? Usually, when a market structure shift happens, when that market structure shift is when, like, the last high or the highest point recent to where price is gets taken out. Market structure shift and the change in the state is basically the same thing. When the last high of this down move gets taken out or sleep closed above, you feel me? There's multiple ways you can say it. But when price closes above that last high or the last low of a move, that is the change in the state. That is what we consider a change in the state. Or if you catch the high at the wick, you might catch a market structure. There's multiple different ways and multiple different strategies that you can use, but that's just one way you can go about it. So moving forward, right? If you look for an SMT, you can also find out that SMTs, when they're formed, they'll really help your confluences and everything align stronger, because then you'll understand that when an SMT is made, based on what index or industry makes it, you'll understand that, okay, I can take this setup now, or I might wait and see if it manipulates. It's all up to however you trade. This is why I say, when in your journey, you always have to make sure that you're building your own plan, marking out your own chart your own way. You feel me? There's multiple ways where people trade. There's different strategies. Some people take this from that strategy, that from that strategy, and then implement it into their own. Everyone has their own strategy. It's just how you learn it, how good your psychology is. Back to the setup though. No more yapping. Once you see an internal sell side liquidity sweep, or even like internal or external liquidity, any type of liquidity that's swept, you're gonna know that price is gonna move in the opposing direction. So we swept out internal sell side. We pulled into this 3 minute. This at this time when I'm writing this, it's a 3 minute. We pulled into a 3 minute, came up, retested after we pulled back. And if you look to the right, you see that we have this like this frame right here, right? This template, whatever you want to call it. We have a fib tool, but you only mark out just 0, 1, and 0.5. This is how you can find either equilibrium, or you can understand the PD array. For me is just standard, like you can do like standard deviation, which is like, if you watch Justin Warland, which is he's in some of the playlists that I have, you'll understand that looking for this standard deviation move, the fair value gap that you're looking for, and here it is, this is what you want to look for. You want to look for anything that's in the discount area. So you see how price is moving up, and you feel me, price came down, swept out the sell side. After we swept out external sell side liquidity, the only other place to go is buy side. So now we have this upside move, and let's say this upside, this is why I say that this tool right here on the right is very good to use, because if price is moving up in this uptrend and you see price pull down, price is probably just trying to grab a little bit more liquidity, a little bit more power to pursue the true draw of liquidity. That is why when you see internal lows and you see, let's say, the most recent low, it gets swept, but we're in a fair value gap, still supporting bullish confluences and bullish movement. So you see price, market starts to shift. We're still going up. We swept out this high, swept out that high. This high is a little higher. Come down, that's external buy side. Feel me? On the internal move, we have a market structure shift. Sleep out this internal sell side, and then we're in a 3 minute. There's multiple different ways for time frames to align. When you look at the certain time frames, each time frame aligns in its own way. That is one thing you will definitely notice when you look at price. Every time frame aligns in its own way. Price is fractal. You're going to hear that a lot just because it's the honest truth. Price is fractal. Every time that you see a candle move in a different time frame, make sure it aligns with the next time frame that time frame aligns with. If that doesn't make sense, let me sum it up. If the 5 minute and the 15 correlate, Make sure that whatever you see on the 15, you see on the 5. Whatever you see on the 4 hour, make sure you see it on the hour. And you always want to make sure that you're not watching the wrong time frame during a certain point of your trading journey, because not trading journey, but you feel me, your trade, because you always want to make sure you're finding the right setup. You don't want to have the wrong bias or the wrong confirmation, and then you feel me, lose a trade. Like I was saying though, swept out internal sell side. You see that this fair value gap, it's under the point 0.5 premium discount. Since we're in a bullish movement and you've drawn out the SIB tool, which is the standard deviation, right? I like to say main threshold just because of something that I learned earlier in my journey, but there's multiple different names for it. You could just say draw your fib tool, draw MP, standard deviation. There's so many different ways to go about it. We're in the discount area. Price seeks out internal lows. We're in a 3 minute fair value gap. Price comes out, but obviously, price is always like I was saying, it's fractal. So even though we swept out the sell side, we're not gonna instantly just go up unless there's news, high impact news, something that lets price know, like, hey, we're only here for a bit. In this example, it's not like that. So with that being said, though, I wanted to say I wanted to I wanted to say that once you see something in here and price pulls out and you see it about to retest it again, take it, because now we have this high, and this high. Now this high is closer to this high than this one was. We created some new buy side. It's not drawn out, but this is just, think about it. New highs are made. Market structure shifts. We have an hourly gap as a draw, a buy side liquidity as a draw, external. We pulled back into a discount area. We swept out internal lows. There's no other way for it to really go besides up after that. That looks clean. That is clean as hell. There's no other way you can really look at that and not say that's not clean. So moving on, that is one way you can find a fair value gap and your setup in the same situation. This is an example. You can use this example if you want. I personally say that when you're looking for setup, do back testing. If you don't know what any type of back testing is, I'm gonna drop a link for the site that I use for back testing. Everyone uses this. It's called FX Replay. You can sign up for free. You get about 50 trades per month, and it only if you do the paid one, you can get unlimited amount of trades depending on which one you pay for. It's a little, not that much a month. I prefer the free. I'm doing something else right now, so I usually use the free one. But it's always good to practice. Practice which session works best for you. Practice what setup works best for you. Practice how you gonna trade during this type of day, that day, which day of the week, during news. There's so many different ways you can go about it. But as of right now, I say practice finding your setup, making sure that you find a proper setup. And if, if, and this is if you think price isn't really as fractal as I say, there's so many different ways you can find a trade in like the blink of an eye. Like for instance, for me, I don't really trade Mondays. I started recently trying, but it hasn't really been something fun for me. Like, so look, we have this stuff liquidity right here. We have buy side right here. Really, not a lot. We have a nice accumulation on, not nice at all, because no one ever likes the market movement like this. We have this high up here, right? We're looking hard. Then come again, oh wow, okay, actually, if we really go deep into it, apologies. If we really go deep into it, we have a high, we have a low, we have a lower low right here, we have a lower low right here, and a lower low right here. But you can clearly see price didn't tap into that. So one thing I noticed with market open as well. I don't know if anyone else you noticed this, but I noticed a lot with market open that price likes to do this thing where around market open it starts moving up, like moving like a meme coin, and it is what it is. Real. I can't really do nothing about it. Obviously, I don't control the market, but you can see that we still stuff in internal lows, still supporting both complexes. As much as we invested 15-minute, we inversed again, disrespected, and then we went higher, started pushing. We have all these moves down here. We didn't get there. We just left out one market open, came up higher, sold out some highs, right? So now after we sweep out some highs, you see how we have this nice move like this? Well, realistically, this is probably way bigger than what it is. So, oh, no, it's probably a bad one. Apologies, guys. Let me look for something that actually works. Look for something that actually works here. Okay, let's try this one right here. So we have high. We got some lows right here. Okay, so let's see. We have yesterday's market high. We have some lows. This is a curve like this. I don't really like this is the one thing like when I say I prefer to like have my screenshots ready just because it's so much easier to like show you guys how this shit works. So let me keep searching, keep searching, keep searching, keep searching. Okay, I'm not finding nothing. Let me look. Take a quick little peek. We're gonna try and look at all the other screenshots from previous sessions. Oh brother, I was just about to say, oh brother, what's going on? Okay, so here's what we got, right? Okay, so now look, here's what I got for you guys, right? You see that we have sell side, buy side. You can see that we have accumulation, and we had this nice little manipulative move back into this 5 minute fair value gap. You see we had this market structure shift right here. See we came up, well not up, we went down, came up, and then after. So when you draw out a standard deviation, right? You would have drawn it out from this high to this low, and it would have been a discount area. You can clearly see we have a gap right here. And this is the one part about it. If you can visualize your gap, it may be easier to read price a little quicker. So we have a gap right here between these two candles. Let's say, for instance, you draw the rectangle, right? That zone. Now you have that 5 minute, or probably even on a higher time frame, if it's probably bigger, you don't even know. But we tap into it. Now we start dropping lower. We have this sell side liquidity. We didn't take out, we created some highs, created some lows, price pulled back into a fair value gap, and just started dumping. So now think about it. We already dropped down, took out sell side liquidity. We have buy side, buy side, buy side, buy side, multiple stacked buy sides. Now we accumulate a little bit, and price jumps up, sweeps up this high. Remember how I was saying, sweeps up this little internal high we have here, and then we come down, retest. Look, we retest that gap, and then we go higher. This right here is never something you actually want to try and trade. I can be so honest with you that like when you trade, you want to try and avoid something like this. Just because if you look at the right side, if you look at the right side, you see how prices are moving like this. This is probably a very high impact move day, and this is why I want to. I'm just showing multiple setups because there's multiple different ways you can take setups. For example, we have an inversion one. And what is it? Inverse fair value gap. That is when a gap is formed and price, as you know how if you know how the candles move, remember, we have open, close. The way that a candle opens and closes, you guys know this. Hold on. You guys know exactly opens, price opens, price has a low, low. That's when price gets down here, but feel me, price didn't close down here. It closed up here. So you see open, low, high, close. Open, move around, some movement, low, setup, high, close. This is what I mean by price is fractal. You can always catch a move inside a candle. It may seem like it's nothing going on in that one candle, but drop down on time frames. I'm telling you, you're gonna see a move. You're gonna catch a move. Let me see. Okay, so we have an inversion right here, and this is probably the crazy part because I should have definitely dropped down on time frame for this one. I want to try and give you guys. Hmm. Okay. Okay. We'll use this one. You have sell side liquidity, buy side liquidity, buy side liquidity. What is liquidity? Imagine liquidity as a resting point for orders. If you watch the video, you understand we have resting point for orders. Literally every time you see liquidity, mark that shit out because you never know when price is going to hit it. Like, not everything is liquidity though. Let me tell you that now. Not everything is liquidity. Not every high and a high of the candle you see here is liquidity. Like external liquidity, external liquidity, swept. Internal liquidity, okay. Now you can, something I like doing is I like marking out the closest high or low to where price currently is. So let's say price is right here. This is a high I'm worried for. These are some lows I'm looking at. Look to the left, say you have a higher high or a lower low. You mark that out because then you never know price is going to. There actually is never, you never know. If you really train yourself to understand patterns and how the market moves, you can catch a setup every time. You see how we swept out some lows. Look, we had these lows formulated. Oh, these lows got swept out by these lows. Then swept out those lows, came in, had this gap, 5 minute gap. Price sweeps out these internal highs. Doesn't sweep out this one, but sweeps out this high. Come down, tap into the 5 minute. See, we tapped into it once, twice, 3 times, and then target buy side. Once you sweep out sell side liquidity, your only option is buy side. When you sweep out buy side liquidity, your only option is sell side. I'm hoping that we can understand that. And if you have any more questions, I want to say you guys come to me, for me, send me a message. So with that, oh, and let me give you guys some extra sauce. If you need help setting up your standard deviation template, it is called a Fibonacci tool, and I can show you guys how to use that. We're going to use this. This is a setup, fib retracement. That is the name of the tool. Here is everything you need to do. Based on your chart color or your chart background, I suggest you try and change up these colors to fit your chart. But here's what it looks like. This is what I've drawn, and then standard deviation. This is a standard deviation. If you watch the videos, and I'm pretty sure I added the video into the playlist. When price pulls back to the 6-2 range, look for good rejections. If we close out of this 0.5 and we still continue, you can take a trade back. That is usually what I look for when I do it. And I'm usually targeting the 2 and 2.5. If this 2 or the 2.5 lines up with any PD array, by PD array I mean liquidity, fair value gap, high time frame PD arrays, I'm taking the trade just because of the fact that I know now that a high time frame PD array aligns with the standard deviation of my fib retracement, I'm going to take it. The probability is higher. I just have to see how price reacts, and I want to make sure that I'm drawing my standard deviation template on the right thing, on price. In the next video, though, I will show you guys how to use that. I don't want to waste too much time. So, with that being said, I'm just gonna keep you guys more updated. Um, I do want to apologize for the wait. I understand that I was supposed to drop this video a while ago, but just because of the fact I had a lot of things going on, I had something going on. I just wanted to make sure. I situate that first. Moving forward, though, any questions, shoot me a text for the mentees. Give me a call. Always here. With that being said, I'll see you guys on the next video that I make for you guys to help.